the social media giant, a social media platform, the giant that is looking wobbly. I'm talking about Meta, formerly known as Facebook. Facebook performance has been nothing but abysmal all throughout this year. Facebook is down for about 55 or 60% so far this year. I have Facebook in my portfolio. Actually, Facebook is now the second largest position in my own portfolio. Facebook has suffered a lot from the likes of Apple, um, Apple privacy, security. When you're using an iPhone or most other phone or laptop that is made by Apple, they will ask you if you want this app to track your activity on your handset. It is restricted towards Facebook. Facebook makes a lot of money from advertisement. So advertisement is it is down this year significantly. Not just on Facebook, even Alphabet, Snapchat, and all that. And also, Facebook is facing a lot of challenge from the likes of TikTok. On its WhatsApp, on its Instagram based and Snapchat. Um, uh, Recently, I think Kendall Jenner or Kim Kardashian, they were talking about why Facebook, why Instagram that is owned by Meta is now looking more like TikTok. People want uh, Instagram to be Instagram, not Instagram being like doing everything like TikTok. If I want to enjoy TikTok, I go on TikTok. I have a TikTok account. If I want to see videos and nonsense and jokes and all that, I go on TikTok. But if I want to see lovely family pictures and restaurants, food, and I go on Instagram. That's the difference to me. I don't know about other people. But anyway, for us as investors, what is important is that Facebook is making money. Facebook make money, we make money. Our investment is yielding by them making money, but their revenue is down significantly this year. So, but we're looking at it. The earnings was from a few days ago, and of course, it trended down. But when a good platform such like Facebook is down, what I think you should do, take your time, do evaluation, do revaluation. Know that Facebook is been there. Facebook has more than 2 billion or 3 billion users. It's still the largest platform. So what you need to do is, sit down, reevaluate. If you need to have more to your position to average down to do dollar cost averaging, that might just be one strategy, and it's a strategy that always works. I didn't just want to have it as a second position in my portfolio, but because I have to average down means that I have to acquire more. That way I keep having it down. My entry price is now around 190 or so, and Facebook is trading for around 160. So given all that, I'm still happy holding it, and in fact, I don't mind if the price still goes down in the short time. Remember, this is investment. In investing, value investor, you rather get a value stock below its intrinsic value. That's the key. Getting the stock as cheaper as it can be. In the long run, you're going to be up. So, for value investors like me, it is important that when the price go down, I add more to my position. Let's have a look at Facebook price action. Let's have a look at the chart to see the price action. Let's have a look at the finances. Let's see how Facebook is actually doing on the book. Meta report earnings. Revenue missed and forecast second straight quarter of declining. Meta missed its second quarter earnings. Meta missed on the top and bottom lines and gave a troubling forecast for the third quarter. The share have lost about half their value this year as marketer pulls back on ad spending. The key is ad, yeah, advertising. Advertising is where Meta makes a lot of money, and This has affected not only Meta, which is Facebook, Snapchat, um, even Alphabet. But although um, Amazon actually makes some money on ad, so I think it's only Amazon that has, I mean, that is still making money on ad so far this year. Um, Facebook parent Meta reported a steer than expected drop in revenue, missed on earnings, and issued a surprisingly weak forecast, pointing to a second consecutive decline in year over year sales. The share dropped 3.8% in extended trading. Here's how the company did. Earnings $2.46 per share. What was expected is $2.59 per share. That is analyst expectation. Yeah, according to Refinitiv. Revenue is 28.82 billion. What was expected is 28.94 billion, just slightly miss expected according to Refinitiv. Daily active user, which is key, daily active user is 1.97 billion. What was expected is 1.96 billion. So it actually beat on that, expected, according to Street Account. Monthly active user, 2.93 billion versus 2.94 billion that was expected, according to the Street Account. Average revenue per user, $9.82. What was expected is $9.83, was slightly, but this is what you need to see and to understand about Meta. Meta has almost 3 billion users. According to here, Meta shares have lost about half their value since the beginning of the year, underscoring investor concern about the health of the company core online advertising business. That unit has been hurt by Apple iOS privacy, as I mentioned earlier, update last year, limiting Meta's ability to track users, and by a weakening economy that's led some companies to slash their ad budget. Revenue in the second quarter fell almost 1% from a year earlier. Meta also issued a disappointing third quarter forecast, citing a continuation of the weak advertising demand environment we experienced through the second quarter, which we believe is being driven by broader macroeconomic uncertainty. CEO Mark Zuckerberg said on a call with analysts that the company will be reducing headcount growth over the next year as it tightens its belt for the economic slowdown. This is a period that demands more intensity, and I expect us to get more done with fewer resources, Zuckerberg said. Revenue in the third quarter will be in the range of 26 billion to 28.5 billion, trailing the 30 billion average analyst estimate. According to Refinitiv, that translates to a projected decline of between 2% and 11% from a year ago. Facebook troubling results follow a trend started last week by rival Snap and Twitter. Those companies both reported disappointing second quarter number. Here is a technical chart for Meta, formerly known as Facebook. We are looking at a daily chart. Let's start with fundamentals here. The EPS rating is 68. The PE ratio is 13. The market cap is 443 billion market cap. Um, Here is shares outstanding 2,706 million shares. Funds own 45%. Here are the past EPS and the current and the estimate for that of the future to come. It's currently trading at $163, and it has gained plus $3.95 today, which is about 2.48%. Let's have a look at it on a weekly chart. On a weekly chart, um, as you can see, the market cap is 442.91 billion. Shares
outstanding is 2706.3 million, and the shares in float is 2270.6. The P ratio is 13, and then the cash flow that they have here is 17.27, I would say, billion. 5 years uh, PE range is within 13 to 36. Return on equity is 31%, not bad. Um, 52 weeks high to 52 weeks low. 52 weeks high is 384, while 52 weeks low is 154. I was sometimes last week, I actually added to my position. 52, it is trading minus 57.6% off 52 weeks high. So you're actually getting Meta for about 50, above I mean below 60%. That's what you're getting it. So it's a big discount. Let's have a look at owners and other information. Funds own 45% of it, banks 1%, insurance 0. Let's have a look at the checklist. Benjamin Graham 8 out of 13. Let's see Warren Buffett. Warren Buffett is 12 out of 16. He failed 4. Peter Lynch will be Peter Lynch 5 out of 8. 5 out of 8 metric. Um, Here on the technical chart, as you can see, I mean, I don't need to, you don't need a soothsayer to tell you that metal has been trending down and is still trending down. As you can see, this is 40 weeks moving average. It is facing down, and this is 10 weeks moving average. It is facing down. It is trading below 10 weeks moving average. Um, you can easily see here, you have like Meta was consolidating around here. Then there was a big drop. Then you started having lower low, lower high, lower low, lower high, lower low, lower high, lower low, and it is consolidating around here. So as you can see, this is on a weekly chart, and the earnings was some few days ago last week. Let's have a look at it on a daily chart. Let's analyze on a daily chart. On a daily chart, as you can see, it has been downward trending. It was trending down, nothing more, trending down, trending down. If you have followed Facebook Meta, you will know that it has been trending down, and you don't need a soothsayer to say this to you. But one thing I can say, Facebook is not going away, even though they are facing competition between their Instagram, WhatsApp, TikTok, Snapchat, and all that, and also advertising is significantly down. Also, the main bigger issue for Meta is the challenge of uh, Apple privacy, and you all know that if you're using an iPhone, you will know. I mean, Apple would always ask you, "Would you want so and so to track, whatever you're doing?" Anyway, guys, be careful. Make sure you do your valuation before you add Meta to your portfolio. Meta is a value stock. I have it. It's actually the second largest position in my own portfolio.
Guys, you have seen the price action, you have seen the finances, you have seen the technical details. Be sure that this metal is good for your portfolio before you have it. Be sure that it is good for your portfolio. Be sure that you have done your own valuation. There are different metrics online that you can use. I mean, you have seen the one on MarketSmith. You can use Warren Buffett. You can use Peter Lynch, Benjamin Graham, and most of others. Do not just add this stock to your portfolio because you watch a YouTube channel and I'm talking about metal. I have it in my account. I mean, my portfolio is the second largest position because I have it down. I had to get more. Thank you for liking this video. We will continue to produce content that will support your investment journey. Please call again.